for taxation, and my name as always is Adesua. My host, kindly confirm you can hear me, sir, and you can see my screen.
Yes, I hear you.
Okay, thank you very much. Welcome, Temi Tokpe. It's nice to have you here today. Sincerely apologize for our previous class. So sorry. Today's class will be our last class for revision. But I just want you to kindly be patient. Let's give other students about 2 minutes to join us. By 7:10 on the dot, I will commence the class. Thank you so much for your patience. We really appreciate. It's 7:10 already. We should get started. From our previous class, in our previous class so far, we have covered partnership, and in our last class, we covered two other topics, which are theory topics. We covered basic ethics in taxation, and we also covered, sorry, we covered basic ethical issues in taxation. That was our previous topic, and we also covered national tax policy. But in today's class, we'll be looking at returns, assessment, and collection procedures. From there, we'll also go ahead to, okay, I think we should kindly hold on for the student to join us back. my video. You can't see my face, but you can hear me clearly. There's an issue with the webcam. Kindly bear with me. You can see my screen and you can hear me clearly. Kindly bear with me. Thank you. So in our previous class, we looked at basic ethical issues in taxation, and we listed the 5 main basic issues: integrity, confidentiality. Okay, about then our second topic, excuse me, in our previous class, we also looked at national tax policy. All right. Then in today's class, we'll be looking at returns, assessment, and collection procedures. After this, we'll look into value-added tax, which is VAT. Okay. So let's begin with returns, assessment, and collection procedures. For returns, assessment, and collection procedures, what does this really mean in what we focusing on here? So here we'll be looking at returns. What are the returns that are expected for that taxpayers are expected to make? Okay, how is their assessment be calculated? What's the duration for them to submit their assessment to the relevant tax authorities, that individuals or companies? How are they expected to pay their tax? How are the relevant tax authority expected to collect the tax from these companies? So first and foremost, we'll be looking at filing of tax returns. Every incorporated company carrying on business in Nigeria is required to file with Federal Inland Revenue Service, which is FIRS. So as a company in Nigeria, if you are registered with CAC, proceeding from there, you are expected to also register with a tax authority, and that tax authority is FIRS. So an incorporated company registered with FIRS is expected of you to file for tax return on an annual basis, which means on a yearly basis. On a yearly basis, you are expected to file the following to Federal Inland Revenue Service. The first is self-assessment return in the prescribed form. So there's usually a self-assessment return form. There's a form. Once you go to FIRS office, just ask them for a self-assessment. As a company, you are expected to fill the revenue that was generated within a particular period. Okay, the revenue, the expenses, the gross profit, the tax, and so on and so forth. All right. Then you're also expected to submit audited accounts. So by the time you open your audited account, the information in your audited account should tally with the self-assessment form that you'll be filling in the premises of FIRS. Then including that is tax. And I'm aware that my other lecturer in person of Mr. has taught you regarding this part for tax and also taught you on how to calculate your capital that is expected for company to their tax returns. All companies registered in Nigeria are expected to file within 6 months of commencement of business. Okay. So while you are after registering with CAC, like I said earlier on, you are expected to, the company is expected to go to FIRS and file and register. Okay, register with FIRS. When you want to register with FIRS, which is the tax authority for a company, okay, when you have to register with FIRS, there are 2 types of registration that is usually done. One, you register for income tax, and you also register for value added tax, which is VAT, because the body responsible for these 2 forms of taxation is still FIRS. So there'll be 2 types of registration that will be done: income tax, which is the normal company income tax, okay, and value added tax. Those are the 2 types of registration. But for income tax, the registration for income tax What are the necessary documents you will need to register? One, you need to what? Fill the name of the company, the registered office of the company, okay, the business address of the company. You know, the registered office may be different from the business address of the company, all right, the precise nature of what business. All these details should be in the memorandum of the company, okay, date of commencement of business, the date to commence business, name and address of bankers. That means you're also expected to include the banks that the company have accounts in and the addresses of the word banks. Then also particulars of major shareholders. However, you have also need to include the following: certificate of incorporation, memorandum and articles of association, form CAC2, AC what 7. So by the time you include all these documents together, that you are registering for what company income tax. So you I sincerely apologize for that. Um, Continue. Is expected to what through evening and then attach the what documents listed here. All of this will be need company income, but two separate letters. For value added tax, you need to what include for value added tax. Oh my god. For value added tax, you need to what include the following: completed copy of VAT form. So there's a VAT form that it's usually in what FRS office. You just fill in the necessary details and then include company certificate of what incorporation. Then for every tax returns, filing of tax returns, what's the duration? Okay, we've listed the documents. We said self-assessment, okay, audited account, and then what tax and capital allowances. But what's the what time frame? What's the duration for a new company? If it's a new company, okay, or sorry, for an old company, it's expected for the company to what file tax return within 6 months after the end of the company's accounting year. For instance, if a company's accounting year is from January to December every year, okay, what it means is that within 6 months of the following year, at the after the end of the accounting year is December, within 6 months, FIRS. But what if it's a new company? If it's a newly incorporated company, you're expected to file within 18 months of what 18 months from the date of incorporation, or 6 months after the end of his first accounting period. So the date of incorporation is usually what the CAC form, which shows that the company is what incorporated in Nigeria. So it's either you pay within 18 months, you file your tax returns within 18 months from the date of incorporation, or 6 months after the end of his first accounting period, whichever comes what higher. Then let's go further. What is the time within which to pay tax access? What it means that by the time an individual, the company has what calculated this tax that is due, the company income tax, also calculated the education tax. What is this time frame for that company to pay the tax to FIRS? The time limit for payment of tax raised by FIRS on a company is usually within 2 months after the service of notice upon the company. Okay, when we say service of notice, what do we mean? We know the one that is mostly common is the self-assessment. When we say self-assessment, what it means is that, for instance, we have Temitope Limited. Temitope is a company, right? Temitope employs the services of an accountant. So at the end of the year, the accountant is what we produce account, and then Temitope Limited goes ahead to call its tax consultant, who is what Adesua and Co-Chartered Accountant. The tax consultant will now come. Sorry, the Adesua is serving as the tax consultant and also the what the auditing firm. So Adesua will come, carry out, audit the account that's been prepared by Temitope's accountant, and then produce an audited account. Do you understand? So by the time Temitope consultant goes to FRA on behalf of his clients, that is usually called what? Self-assessment. But their cases, if after submitting to FRS, this is where the relevant tax authority is notified tax that the company is expected to pay. Probably they would have observed that the revenue stated, I mentioned it in the previous class that these days FRS have access to most companies' accounts, okay? So that they would have realized that, oh, the revenue was understated, DF, and so many other things, and therefore this is not the what income tax that the company is expected to pay. So what they do is that FRS will now go ahead to compute the amount that they think is due by the company, and then forward it to what as a form of service of notice to the what company. However, what it means is that within 2 months you are expected to pay the amount. If the company insists that the amount is not correct, then the tax consultant can then go ahead to write to the relevant tax authority and then explain how they arrived at each of the previous value. Now reach an agreement, but we'll discuss that later. But what it just means is that you're expected to pay within 2 months, or at least within the 14th day of December of the assessment year for which the tax was charged. FRS gives the opportunity when you have company income tax that is due, okay, most times what they do is that they can give the company an opportunity to pay in installments, but it's usually not more than 6 installments. Okay, you can, for instance, your tax due is 30,000 naira. When you are making your first installment, you can now write to FRS, the tax consultant will write to FRS that, okay, this is how we want to pay the remaining balance, but you're expected to pay the balance not later than 14th day of December of the year of assessment. Okay. We welcome back. Time within which to pay access tax. Okay, previously we said in our class, okay, let me talk you're there. Okay. I previously said that the time duration is usually within what 2 months, but at least in the year of
Bro,
assessment,
she's out again.
yes, oh God.
The student is out
Prof,
again.
and she said she's using Glow and the network is not stable. Are you with me, sir?
Yes, I'm with you. She's out again.
She said she's using Glow, that the network is not stable. Okay, sorry, I think I need to. Okay, when I talk about self-assessment, kindly send me a chat to confirm you can hear me clearly, so we'll be on the same page. Kindly send me a chat. Okay, okay, you said you can hear me very well. Wow, sorry, I forgot my. Okay, I was um, I was muted. Sorry about that. Okay, I thought of best of judgment assessment. So say best of judgment assessment. Okay, there are two cases in which FRS can give best of judgment assessment to a company. All right. One is a scenario where the company FRS is not satisfied with the audited accounts and the tax computation that has been submitted by the company towards FRS. If they are not satisfied, FRS will go ahead to what, raise their own what, assessment and send to the company. All right. Then there's also a case where a company has failed to submit self-assessment return or audited account and FRS is of the opinion that it is liable to what, pay tax. It may then proceed on paying what, on it may then proceed what, based on bears of judgment. They will now be the one to determine the total what, profit that the company would have what, made within the period of that. Then let's go back to duty assessment. What's about duty assessment? What does it mean? In this case, a taxpayer or a taxpayer, what it means that a taxpayer or his representative has committed fraud, okay, either willfully or out of ignorance or by default, okay, in connection with tax assessment. FRS is empowered to assess such company to what, additional tax in order to make good any loss attributable to the fraud. So what it means is that if a fraud has been committed by a taxpayer or by any of his representatives, either this was negligent or default or willfully, okay, FRS are allowed to what, to give a what, an additional charge to the company based an additional charge to the company, okay, to cover up for the what, the loss that has been attributed to what them due to the what, fraud. The service of notice of assessment. Let's go forward. FRS are expected to what, arrange or send their registered codes. So when they make a notice of assessment of a company, they are expected to send it by what, registered post. And the service of assessment will show the total profits of the company, the tax payable, the place at which the tax should be what, paid. FRS will probably refer the tax station where the company are expected to pay their what, company income tax, which is usually the FRS office nearest to the company's location. Alright. When we say final and conclusive assessment, what do we mean by final and conclusive assessment? When an assessment is final and it's conclusive, it means that the assessment that is raised on a company, okay, is final and conclusive. What it means is that there is no objection or appeal that has been what, logged or raised by the company. When FRS submits, give a notice of assessment to the company, all right? If the company is not satisfied with the company contract that FRS are asking them to pay, they will seek for what, either give an objection or what, appeal for the amount to be reduced. But if there is no valid objection or there is no appeal, in that case we say what, assessment is final and conclusive. Then also, if the amount of total profit has been determined on appeal, if there's an appeal by the company, FRS received company competence of our company, you request, we received a letter from FRS, okay? Temitope Limited received a letter from FRS that the CIT to be paid to 500,000 naira. And then the tax consultant, Adesu and Co. Chartered Accountant, went on behalf of the company to seek for an appeal. And the company and FRS later agreed that your tax due for that period should be 300,000 naira. So whatever total profit has been made, we agreed on based on the appeal. We refer to that as what, final and conclusive what, assessment. So what's the time limit for paying tax? We mentioned that before, okay, within 2 months, all right, or latest 14th day of December of the year of what, assessment. All right, let's go for that. The penalties for late payment of tax. What are the penalties? When tax is assessed on a company, okay, it's not paid within the time that is statutory, which we mentioned, all right? There are penalties. One, penalty of an amount equal to what? 10% per annum of the amount of tax what, payable. Let's say the tax payable is what? 50,000 naira. The company income tax payable is 50,000 what? Naira. And the individual has not what, paid that amount. You by the time you are paying the amount, you pay a penalty of what? 10%, 10% per annum of the amount of tax was payable. So 10% of 50,000 is what? 5,000 naira. 5,000 naira will be paid as what? As penalty. In addition to that, you also pay an interest, which will be at the current bank lending rate. Okay, so it has to be the current bank lending rate, whatever interest it is. You pay an interest on the amount due. So let's assume the interest was what is also 10%. So you also pay 10% of what 50,000 naira. The total penalty for Temitope will be 10,000 naira, including 50,000 naira, which is the company income tax due. In total, we have a total of about 60,000 naira. And then the penalty and interest are payable not later than 1 month after the date of service of demand notice. Once a demand notice is sent to the company, you are expected to pay not later than what 1 month. Enforcement procedures for the tax authority. How are they expected to what, enforce these procedures? Okay, to ensure that the taxpayer pay their tax in India. When they fail to pay, what are they expected to do or carry out? In a case where a company has failed to pay any company income tax, okay, that it has been assessed on, FRS are authorized, okay, they are empowered to either enforce payment, okay, or they recover the tax due through any of the following methods stated. One, FRS are expected to distrain on taxpayers' goods, other chattels, bonds, or other securities, which means that FRS are what empowered to seize, they're empowered to seize the taxpayers' goods, okay, their chattels or their bonds or what other security. They are also empowered or authorized to seize land, premises, or place owned by the taxpayer. Okay, I think in the year 2019, which was last year, that was quite common when there was a period of time where the FRS had access to, they have access to companies' accounts. So during that period of time, they started, should I call it speech hunting? Okay, they actually, based on their own records, they observed that there are a lot of taxpayers who haven't been remitting the tax that they're expected to pay. So what they did first and foremost, they sent letters to banks, get companies have accounts, and some of these accounts here was there locked. What it means is that the company do not have access to its funds in bank accounts. Okay, so what it means that FRS are already have what they are authorized, they are empowered to what see some of the what taxpayers with either bonds or securities. But what was common last year was that what they ensure that the company do not have access to the funds in their account until they are remitted the amount that they've been assessed. Okay, so there was a law shows that the taxpayers let the company going to fight the case. All right. So let's continue. When we look at let's be looking at the tax clearance. All right. Tax clearance. Wow, that's a very popular word. It's a certificate that is relevant tax authorities. So it was usually issued by the state inland revenue service. For example, if I'm an individual that I need my what tax clearance certificate, I'll go to LRS. That's LRS that expected to issue tax clearance certificate and individual. But for a company, all right, tax clearance certificate is issued by what LIRS. So what is a tax clearance certificate? What tax clearance certificate shows the true tax position of the taxpayer. All right. The certificate is issued upon what application. Taxpayer will apply for a taxpayer certificate. A taxpayer clearance certificate, I can just describe the features of the taxpayer certificate. It's a certificate that discloses what first and foremost the last 3 years of work assessment. The last 3 years that the company has worked assessment. For example, Temitope Limited, remember the company is already existing. It's a new company. Okay. Let's say Temitope All right. By the time she applied to get her tax clearance certificate, before she applied to get her tax clearance certificate, she has necessary work. She needs to ensure that she has paid all her tax was due. She's not owing anything to the relevant tax authority. She's clear of any tax payable. All right. So after that, she can then go ahead and apply for a tax clearance certificate. Tax clearance certificate shows the last 3 years of assessment. So in my example, I say 2019. What are the last 3 years of assessment? We're looking at 2016, 2017. So the last 3 years of certificate, it will show what the TTC number, tax clearance certificate number. There is a number one time. Then that is usually on the one certificate given by the relevant tax authority. It also for the tax office, okay, that the TCC number was given, date of issue, the name of the company, the registered company number, the date of incorporation, the taxpayer identification number. Two, then you also go ahead to state the effective business on the TCC. Okay, on the TCC certificate, we also have revenue to turnover, Temitope, please let me know if you can hear me clearly. Can just send me a chat. I would appreciate that. Okay, so we can continue now. We're looking at the features of tax clearance certificate. certificate. What are the contents of a tax clearance certificate? Okay, and in addition to that, tax clearance certificate also has the revenue or turnover that the company has made within the 3 years will be stated there. The total accessible profit or loss will also be stated. The total profits, the tax payable, tax paid, okay, the tax paid, the CIT receipt number, and the date of payment. Tax is outstanding, which is rare because the tax authority we usually ensure you have no tax outstanding before you go ahead to apply for a TCC by the company. Then the source of income of the company will be stated. Any other comments? Then the expiring date of the tax clearance certificate will also be stated. So these are the contents of a tax clearance certificate. Before any relevant tax authority, which is FRS or the State of Internal Revenue of that state, goes ahead to grant a TCC, they will need to ensure that one, all the taxes of the company have been paid to date or that of the individual. Then penalties and interest rates have been paid. If penalties and interest have accrued within the 3 years, the payments will need to be made. They also need to ensure that returns have been filed up to date before they can accept or grant a TCC to an individual or a company. They also need to ensure that there are no outstanding tax queries, tax audit, or tax investigation currently ongoing for the company. Then for TCC, what transactions are usually required for TCC? There are some transactions that are carried out by companies or individuals that they will this the to carry out such transactions in Nigeria, the company will be required to present a TCC, a tax clearance certificate. For companies, when you're applying for any government loan for an industry or a business, a tax clearance certificate will be needed. When you're registering for your motor vehicle, a tax clearance certificate is usually requested for. When you're applying for firearms license, application of foreign exchange or exchange control permission okay, for TCC, all right. Okay. For TCC, sorry about that. When you're applying for registration for a contract, which is the which is quite common. Okay, when you're applying for any contract, the part of the requirement to be for the company or the individual to provide it was tax clearance certificate. When you're applying for distributorship, when you're applying for an agent license, when you're applying to get a gaming license, when you're applying for a contract, okay, I've mentioned that already. When an individual or a company seeks for the approval of building plans, you need to present your tax clearance certificate. To get any award of contracts by government, by any agency or a company, you also need your tax clearance certificate. So there are a lot more transactions the tax clearance certificate is requested for. So what's the procedure for processing your tax clearance certificate? I've mentioned before that tax clearance certificate is usually issued by FRS if it's a company, okay. It's a very important document, is necessary for major transactions within Nigeria, okay, or outside Nigeria, major transactions. For a new company is expected to for while they are applying for a TCC, they need to register with their tax identification number, which is TIN. Federal government has made that compulsory. This was stated in the new finance bill, okay, the recent finance bill. It was stated that all companies are expected to have their tax identification number, which is TIN. Then they'll then go ahead to process and issue of issuance of a tax clearance certificate. But for an existing company, the procedure, you need to pay for your previous income tax and file for your income tax returns till the current date, all right. Then you can go ahead to apply for TCC. TCC will be processed and issued to the to the taxpayer that was requested for it. Are there penalties? Yes. If there are penalties for if a person obtains TCC that gives an incorrect information that does not relate to the what the amount or what or that does not relate to the exact liability of or tax liability of that company. Okay, if let me come again. If a person or a taxpayer obtains tax clearance certificates, all right, and the tax clearance certificate does not give an accurate information of the company, there will be a penalty for that. Then if the company what gives a falsifies any document that is required, probably goes ahead to falsify a tax clearance certificate just in order to get a transaction done or to get a contract, that alone what means the individual or the company has committed what an offense, and the person is liable to pay a fine of no more than what 200,000 naira, or will be what in prison for a period of not exceeding 3 years, or both penalties or both punishment will be what due to the individual or the company. For tax clearance certificates, there are some problems of tax clearance certificates. Yes, there are. One, the tax authorities sometimes require that taxpayer comply with tax payment to date of application for this certificate. So what it means is that before you get your tax clearance certificate, no matter how urgent the transaction is, the relevant tax authority gets to ensure that the taxpayer must have paid his tax was up to date. Then the certificate, which is the TCC, it often takes longer time to be issued. When on FRS portal, when you go there, they'll tell you by the time you apply for your TCC, you should get it within a period of what 2 weeks. But man, TCC certificate, I don't know if it's usually what it's usual most times, not all the time. It takes a longer period of time to be what to be issued by the relevant tax authority and given to the what taxpayer to carry out his necessary what transaction. Then thirdly, the authenticity of TCC as evidence of tax compliance. Okay, what it means is that the certificates are sometimes issued under questionable circumstances or may be forged in extreme cases. There are cases where it may be needed urgently by some taxpayers, and then they go ahead to falsify such certificates to be this to falsify to sorry to falsify such certificates. All right, then let's look at the following questions. Like I mentioned in our previous class, for taxation examination it will be in two sections. The first section is the multi-choice section questions, which is in section A. Then the section B, you have what theory questions. The multi-choice questions, we'll just look at about 5 questions here for us to take. Okay, 5 questions here. So let's look at the first one. One of the following, the answers to this question have been discussed since we started this class, so I expect us to be proactive during this section. Okay, once I read this question, kindly ensure you send your answers. Just you have your notepad and your pen, just write your answers and then you mark yourself also. All right, so I'll be sure you've been following. You can also post to the chat, just send your answers to the what to the chat. So let's start with our first question. It says, one of the following documents is not included in the annual returns required to be filed by all incorporated companies in what Nigeria. Okay, I mentioned the documents that is usually included in annual returns. So let's look at it. A, it says self-assessment return in the prescribed form. B, withholding tax remittance schedule. C, audited accounts. And D, tax what computation. All right, that's on question number 1. Okay, so I'm already sending their answers in. Okay, for question 1, the answer is what B, which is withholding tax remittance schedule. You all got that. All right, let's move on to the next. Oh, we had an option E. It says capital allowance computation. We mentioned that for annual returns on a yearly basis, okay? Documents needed, you need your self-assessment return. We mentioned audited accounts, then we mentioned tax computation and what capital allowance computation. The one that is not included is what withholding tax remittance schedule. So that's our what option B. That's the answer to question 1. Let's move ahead to question 2. It says, in the case of an existing company, within how many months after the accounting year should it file its tax returns? Okay, for an existing company, how many months does it take for it to file its tax returns? I mentioned that using the example of Temitope Limited, so I expect us to remember. Okay, A, it says 18 months, B, 12 months, C, 6 months, D, 8 months, and E, 14 months. And the answer is what? C, 6 months. Wow. Okay, some of you have gotten the answer. All right, that's nice. Okay, then let's move on to the next question, which is question 3. It says the following are the documents expected to what accompany the the following are the documents expected to accompany the application for registration by companies with FRS while applying for what? Applying to FRS, okay, for the registration of a company. What are the documents was needed? They said except, so it means the documents above are needed, excluding what? One in the above. A, bank statements. B, memorandum and articles of association. C, certificate of incorporation. D, form CAC 2, and E, form CAC what? 7. All right, and our answer is what? A, bank statement. Bank statement is not part of the what document to be presented by a company. Okay, when you are registering for your when you are registering what FRS for the first time. Number 4, it says an assessment raised on a company is said to be final and conclusive where all of the following apply except A. It says no valid objection has been lodged against the amount of total profits. B. No valid appeal has been lodged against the amount of total profit assessed on a company within the time statutory allowed for that purpose. All right. C. The amount of total profit has been agreed by the taxpayer after his objection has been determined by FRS. Then D says the amount of total profit has been objected by the taxpayer within the statutory time. Let's look at the question again. An assessment raised on a company is said to be final and conclusive. I explained the meaning of when they say an assessment is final and was conclusive. Then they said it's among the following except what? One. And the answer is what? D. The amount of total profit has been objected by the taxpayer within the statutory time. Okay, that is the one that is excluding. When we say an assessment is final and conclusive, what we mean is that there is no valid objection has been raised and by the taxpayer, okay, and no valid objection or appeal has been what raised by the taxpayer. That's when we say a tax what that's when we say a tax an assessment is what final and conclusive. All right, let's move ahead. TCC, tax clearance certificate, shall disclose all of the following information except, so you can see here that it's important for you to know the content of a tax clearance certificate. This can come out in your what? In your multi-choice question. It can also come out in your section B, where you may be asked to explain what you don't understand by TCC. All right, list the features of the what document, and they can also ask you to what to state probably about 5 or 6 transactions, okay, that these documents will be what needed by a taxpayer. So it's important for us to know this, okay? So TCC shall disclose all the following except A, turnover, B, accessible profit or loss, C, operating expenses, D, total profit, and E, tax payable. A TCC certificate includes turnover, it includes accessible profits or loss, it includes total profit, it includes tax payable, but it does not include operating expenses. So our answer here is what? Is C. Okay, so let's look at some open-ended questions. I think we have about five here. All right, so let's just look at it together. Question one, it says the past. So these are the type of questions you see in your session B. The past to assess the incomes of corporate organizations to taxes are vested with what FRS as entrenched in the company's income tax or act. To comply with the statutory provisions, corporate organizations are required to file tax returns within a specified period of time to the relevant tax authority. They are required to state the documents required to be forwarded to the relevant tax authority when sending the first returns or set of returns. Okay, we have discussed that in the previous what in the previous in we've discussed that earlier on. Okay, B, the time lag for filing the first set of returns and subsequent ones, and the penalty for late filing of what returns and the due dates. I expect you to be writing your answers already, okay, because we've discussed about this. All right. Then number two, you say, when does an assessment become final and what conclusive? Wow, that has also been what discussed. We just read a question on that in our multi-choice questions. Okay. Then question three, it says the self-assessment system was introduced with effect from 1st January 1996 to run parallel and in conjunction with the existing 47 government assessments for both individuals and corporate taxpayer. How does this operate and what are its benefits? So here they're asking us about what the self-assessment system. The self-assessment system, sorry, we are looking at question three. The self-assessment system is what ongoing here in here in Nigeria. Okay. And this is a system where a taxpayer is required to make a return of his what income, expected to make a return of his income or tax liability based on such what income. In this case, taxpayer for self-assessment, the taxpayer will what assess itself in his own company on the what tax due, the total profit of the year, the total profit of the year. Okay, also calculate his company income tax and the education tax. All of this will be submitted to what FRS as at before on or before the due date. Okay, and they are expected to what pay company income tax to FRS within 2 months of the notice of assessment or latest what 14th December of that year. Then they can either pay the money in a lump sum or split it into no more than six what installments. All right, so you can also go ahead to explain the what benefits. What are the benefits? It's easy, it's easier, quite easy, it's very easy for the taxpayers. And in cases where the taxpayers can always what employ the services of a tax consultant to carry out the what to calculate the tax computation and capital allowance that is what as that is needed to submit to what FRS. Okay, so let's look at question four. In relation to the assessment procedures in Nigerian Taxation Administration, write on the following: A, types of assessments available to companies. Okay. B, time within which tax is to be paid. C, penalty for late payment of tax. D, back duty what assessments. All right. From B, C, and D, we've discussed it earlier. So let me just say a little about A. For the types of assessments available to companies, one, we have what we call provisional tax what assessment. And what do we mean by provisional tax assessment? It's usually what an estimate of tax payable based on the tax paid by the taxpayer in the preceding year of what assessment. We have three types of assessments. We have provisional tax assessment, we have government assessment, and we have self-assessment. For government assessment, a company's tax liability for the year is determined by the tax authority, which is then conveyed to the taxpayer through a notice of what assessment. I also mentioned that earlier, right? Then the third one is self-assessment, which is the most common. Tax is assessed by the what taxpayer, but currently in Nigeria we do more self-assessment, and there are cases where government, which are the ones that carry out assessment on what companies, and once they do, they send out the notice of assessment to the office of the company. So let's continue. Let's look at question 5. It says, is the habit of some taxable individuals or companies to avoid paying tax one of the measures introduced by the government to bring taxpayers into the tax net? Was the introduction of tax clearance certificates. That's very true, because when taxpayers realize that without your tax clearance certificate, you may not be able to carry out certain transactions, then it makes it kind of what compulsory for them to have their tax clearance certificate so that they can proceed to what carry out different transactions. Because without it, you'll be limited, a taxpayer, a company will be limited to carry out transactions. Okay, so what are some of the transactions? So we should list about 10. Okay, in addition to what we have, registration of motor vehicle, when application for government loan or for an industry or business, when a company is applying for foreign exchange or exchange control permission to remit funds outside Nigeria, when a company is applying for certificate of occupancy, a TCC certificate will be what's required. Application for awards of contracts by government, we mentioned that. Okay, we also mentioned application for transfer of real property. When you intend to transfer a real property, a TCC will be what required. Application for pools or gaming license, application for registration of a contractor, application for distributorship, stamping of guarantors form for Nigerian passports, a TCC will be required. Application or election into public office. So if you intend to go into politics, or you've been elected to go into public office, the TCC of that individual will be what asked for, will be required. Change of ownership of vehicle by the vendor, application for plot of what land, a tax clearance certificate will be what needed. Wow. Okay, with this, I guess we've come to the end of this topic. Okay, returns assessment and collection period. If you have any questions so far, kindly set them through the chat button and we'll discuss it. Let me give about 2 minutes for questions to come in so I can attend to them before we move to our next topic. All right. Okay, a minute gone. Ask your questions, please. Okay, it's 2 minutes already. Okay, no questions. Wow, does that mean we understood everything? Okay, let's um let's proceed. So we'll be looking at value added tax. Okay, which is VAT. Okay, let's get started. So when we say VAT, value added tax. value-added tax, that's the full meaning of VAT, okay? It's an indirect tax, okay? It's a tax on goods and services. This form of taxation is charged on what goods and services. So the Nigerian tax system introduced VAT in what in excuse me in 1993, and it was effective from on the date it was effective from the date of first January 94. And was also recently amended in February 2020. So previously, before 2020, okay, the rate of taxation was 5%. The rate of value-added tax of 5%, but it has currently been increased to 7.5% on the value of all taxable goods and services. So VAT is charged and payable on supply of all goods and services, and they exempted in the first schedule to the what Act. Okay, so that's that for value added tax. So please note the basic features of value added tax. Okay, I said value added tax is an indirect tax on goods and services. They mentioned that it was effective from 1st January 1997. However, it was amended in 2007, and as of 2007, the tax rate was what 5%. But recently, it was also amended in the new finance what bill. Okay, which later became from 5%, it moved towards 7 point, it increased to 7.5%. So that's the current rate for taxation on all taxable goods and services. Okay, when I say all taxable goods and services, which means is that what it means is that not all goods and services are what value added taxable. Okay, not all goods and services that you charge VAT on. It's only goods that the goods and services that are taxable by what value added tax that you charge the tax on. So furthermore, we'll get to look at the goods and services that are vatable. Goods and services that you charge VAT on, we refer to them as what vatable goods or vatable what services. So you get to hear me using the terms during the course of the class. So VAT is charged and payable on supply of all goods and services other than the exempt items listed in the first schedule of the what of the Act. So there are basic three characteristics of VAT. One, it is a consumption tax. Okay, you VAT is only charged when such goods or services is consumed. What it means is that when the goods is what either purchased or sold, that's when you charge value added tax. For services, when it is rendered, okay, that's when value added taxes was charged. Then secondly, it is a multi-stage tax, which means that value added tax can be charged more than VAT can be charged on goods or services more than once. All right. We'll understand the meaning of that when we start looking at examples. Okay. Then the incidence of value added tax is on the final consumers. Whoever is receiving the goods, whoever is receiving the services gets to pay the what value added tax. All right. Then let's look at administration of what tax. Section 7 of the Act, okay, specifies that VAT shall be administered and managed by FIRS, which was previously known as what Federal Board of what Internal Revenue. It is now known as Federal Inland Revenue what Service Board. So this body is the one in charge that manages the administration of value added or tax. Then let's look, there are goods and services that are vatable. Let's look at goods. Goods and services are vatable. All right. However, there are some goods that are exempted from what? From VAT, which means that these goods are not expected to be paid. VAT are not expected to be paid on these what goods. So let's look at the examples of the goods. First and foremost, all medical and pharmaceutical products, they are non-vatable. It means they are exempted from VAT. Basic food items, okay, yam and so on and so forth, they are non-vatable. Books and educational materials, baby products, plant, machinery, and goods imported for use in export processing zone. They are non-vatable. Plant, machinery, and equipment purchased for utilization of gas in a downstream petroleum operations. They are non-vatable. Tractors, plugs, and agricultural equipment and implements purchased for agricultural purposes. They are non-vatable goods. All exports are non-vatable goods. Fertilizers locally produced for agriculture and what veterinary medicine, they are non-vatable. So these are the list of goods that are non-vatable. Then let's look at services. Are they services that are non-vatable? Yes, they are. What are they? One, medical services, they are non-vatable. Services rendered by microfinance banks and mortgage institutions, they are non-vatable. All right. Plays and performances conducted by educational institutions as part of learning, they are non-vatable. All exported services are non-vatable. All right. Then I also want us to know the following, the meaning of the following. When we say basic tax point, what do we mean? A basic tax point is a point where tax become payable. At a point where tax become payable for a goods or a service, that point is known as basic tax point. In most cases, the basic tax point for a supply of goods occurs at their what removal. At any given point where a tax at any given point where a tax become payable, that point is known as a basic tax point. But for actual tax point, when we say actual tax point, what do we mean? Basic tax point arises when the goods are delivered, okay, or services rendered. An actual tax point can be created either before or after the basic tax points. Do we understand? Basic tax point is when either goods is delivered or services are rendered. But for actual tax point, it can happen before the basic tax point or after the basic tax point. I have an example that we use to cite that. Okay, we'll get to see the examples soon. But first and foremost, there are three different types of value added tax. Okay, generally in the world, there are three types of value added tax. All right, they call them variants, the three variants of what value added tax. And what are they? First, we have the gross product variant, we have the income tax variant, and we have the consumption variant. For the gross product variant, this allows deduction for all purchases of raw materials and what and components. Tax is levied on all sales with no deduction for business inputs. No deduction is made for capital goods such as plant and machinery and depreciation. So it means that this gross product variant, okay, what it does, this type of value added tax, they allow deduction for all purchases of raw material and components. You can deduct what VAT. VAT. Tax is levied on all sales, but no deduction is made for what business inputs. Okay, when it comes to capital goods, when it comes to plant machinery and then depreciation, no tax is levied on what on such. Then the next is what income tax variant. This allows deduction for purchases of raw materials and components plus depreciation on capital goods. Okay. The economic base of income variance is the net national product. That is net investment, gross investment minus what depreciation is what is tax. For consumption variance, this is the one that is widely known and which is popular and widely known. Okay, include Nigeria is one of the countries that use what consumption variance. So this is what we use in Nigeria for value added or tax. With consumption variant of value added tax, the economic base is equivalent to total private or consumption. Here, deductions are made for all businesses purchase, okay, and capital assets. So VAT is charged on what purchases, is charged on capital assets. Of all the three variants of VAT, consumption variant is popular and is what widely used. So let's look at registration of value added tax. I mentioned that when we are looking at returns, assessment, and collection procedures. I say for value added tax, while the company is going to FRS to apply for income tax, you're also applying for value added tax. Okay, for a taxable person, you should work within 6 months of the commencement of the act, or within 6 months of commencement of business, whichever is earlier. The company is expected to register with what Federal Inland Revenue Service for the purpose of value added tax. Then for government, we have those we call what agents. They are agents. When we say agents, means the agents are, they act on behalf of what agents, they are acting on behalf of the what government. In this case, they are what government ministries, okay, parastatals, etc. These government ministries, statutory body, and other agents of government, they should register as agents to the what board, which is Federal Inland Revenue Service board, because they act as agents for collection of tax under this act. So let's say how this works. For government agencies or ministries, parastatals, okay, most times they get to what give out contracts to companies, to individuals. So while they give out contracts, excuse me, excuse me, before payment of this, by the time the contract has been done and they process payment for the companies, okay, don't forget, before contract you need to what the pay on the individual to the before getting any contract. Okay, then aside that, since these government parastatals or ministries are acting as agents, so what it means is that before they make payments to the company after the completion of such contract, okay, before they make the payment, they are expected to what to calculate the value added tax, calculate the withholding tax, and remit to the what to the relevant tax authority. So the value added tax, the withholding tax, will be deducted from the amount to be paid to the contractor. By the time they deduct this amount, is the net balance that will be paid to the contractor. Let me give you a simple example. So we have okay, let's say we have NAFDAC. Okay, NAFDAC gave a contract to supply office equip worth 2 million naira by a company. The name of the company is FCA Furnitures. All right. So FCA Furnitures, as the name, as a company, goes ahead to get the contract by NAFDAC and then supplies the furniture. The furniture is worth 2 million naira. While processing the payments to be made to the company, okay, what the government ministry will do, what they'll do is that they'll calculate 5%, okay, of 2 million naira, which is served as what withholding tax. Okay, 5%, which is what 100,000 naira, will be what deducted. 7.5% will also be what deducted. For what 7.5% is what value added tax if it's recently, okay, since when the finance bill was what implemented. So they will calculate 150 plus 100,000 naira. That's how much? 250,000 naira. So they'll deduct 2 million naira, which is the what gross amount, minus the taxes. What we have as net is what 1,750,000 naira. That amount to be paid to the owner of the company, which is FCA Furnitures. So you can see how this, meanwhile, the government ministry will then remit 250,000 naira to what FRS. Okay, immediately it remits the amount, FRS will now send a tax receipt. It will send a receipt, both a VAT receipt and a withholding tax credit withholding tax receipt to the company. The company will receive it in its online in its email, okay, stating that you have paid 200,000 as what withholding tax, and you have also paid 250,000 as what value added tax. So that's how this in these agencies work as what, as these government parastatals work as what, agents. Then let's look at non-resident companies. There are companies that are not resident here in Nigeria, but they carry out transactions here in Nigeria. This act specifies that a non-resident company carries out its business in Nigeria, they must register what, they need to register with the what, board. But in registering, they'll need to use the address of the person who acts as agent of the what, company. A non-resident company shall include the tax in its invoice, and the person to whom the goods or services are supplied to in Nigeria shall remit the tax in the currency of the transaction. So value added tax is usually remitted in the currency of the transaction. If the transaction was done in dollars, value added tax will be remitted in what, dollars. If the transaction was done in naira, value added tax will be done in what, naira, and any other currency that the transaction was what, carried out. Let's look at preparation of value added tax account. How do we prepare value added tax account? Okay, to calculate value added tax, okay, is done through a system that we call a credit system. Okay, how it's usually carried out or operated is that all the VAT on inputs is deducted from VAT outputs. So VAT input, we call it VAT input and VAT what, output. The difference is the net VAT payable to the what, board. Okay, so let's just look at a simple illustration. You know, if let me use a simple, okay, for a company, or for a company, okay, while you are calculating your value added tax, please note that before the percentage increase in value added tax, the previous rate was what, 5%, and that's what um I used this question because of the dates. Okay, but let's just look at this together. To calculate the VAT payable by a company, all right, on our debit side we have our debit and our credit side. Okay, whatever VAT inputs we pay, it will come to our debit side. VAT on sales and services are credited to VAT accounts. So when there are sales on goods and there are sales and there are services rendered, okay, if there are VAT on those goods and services, we'll bring you to the credit side of our value added tax account. This is our VAT account here. Okay, these are VAT accounts here. All right. Then VAT on purchases is debited to this account. So when we make purchases on goods, the VAT that is being charged will come to the debit side of our value added tax account. The result credit balance is payable to the VAT office. But if there's a debit balance, the company will expect a refund by tax authority, of which we know tax authority do not do a refund. All right, but you need to ensure that the VAT office is aware that there is a what, a credit balance, so it could probably be used to nil off the VAT payable by the company for the following month. Okay, so this is the VAT account, this is the debit side, and this is the what, credit side. So if the company makes any sales or services, the amount is don't know, it's called known as what, output VAT, it comes to the credit side. If there are purchases, the VAT paid is what, input VAT, it comes to the what, debit side. So let's look at this together. Our input VAT, which was made on purchases here, is 20,000 naira. On sales, we had total VAT of what, 180,000 naira. So we'll bring our 180,000 naira down. As against our debit side, we'll have a credit of what, 160,000 naira, to ensure we arrive at 180,000, which equates our debit and our credit sides of the journal. Okay, the amount payable to the board is 160,000 naira, because you have paid 20,000 naira to your vendor, okay, to your supplier, and then your customers have paid you worth of about 180,000 naira VAT. By the time deduct this, you have a balance of 160,000 naira. This is the amount payable to the board. It should be noted that the major difference between an exempt item and zero rate item boils down to the treatment of input VAT, whereas it is not refundable for exempt goods or services, however refunded on the zero rate items. When you say zero rate items, means that there are some items that the value added tax rate are zero. The essence of bringing it here, if you say zero, it will, okay, what it means is that here in your value added tax account, okay, if it's an exempted item, it will not be refundable. But if it's a zero rate item, okay, and you have a debit here, that amount will be what, refunded by FIRS or the VAT office. Okay, then let's look at the differences between value added tax and withholding tax. That's part of our the questions we have here. Okay, what are the differences between value added tax and withholding tax? For VAT, VAT is an indirect tax, okay, while withholding tax is a direct tax. VAT, value added tax, is an not indirect tax. Withholding tax is a direct tax. Withholding tax is deducted at what? At source. Secondly, value added tax is imposed on goods and services. Withholding tax is imposed on incomes at what? At source. Okay, value added tax is imposed currently at 7.5%, previously 5%. Okay, the rate applicable is dependent on the type of transaction. For withholding tax, their rates are usually 5% to 10%. Okay, value added tax is backed by value added tax Act 2004, while withholding tax is backed by certain sections of company income tax Act 2004. For withholding tax is can be used, okay, at the end of the year. Like the company, I gave an example of FCA Furnitures. At the end of the accounting year of FCA Furnitures, after they calculate their tax liability, okay, they can then print out their withholding tax or receipts. The total of their withholding tax receipts can be used to nil off their company income tax. It's only withholding tax that can be used to nil off, because for withholding tax is known as a what? An advance form of what? Tax. Just paying your tax in advance. So you can also use it to what? Nil off the current liability of the company for a particular what? Period of what? Time. For value added tax, it's government only by what? Usually by what? FRS. But for withholding tax, is also run by what? Either by SIRS, as the State Internal Revenue Service, or the FRS. Okay, VAT is shared by three tertiary tiers of government. Okay, we have the federal government, the state government, and the local government. But for withholding tax is not shared by the three tiers of government. Okay, that is shared by the three tiers of government: federal, state, and local government. Then let's look at offences and penalties. We just have a few here. Yes, for offences, when they are for when you when a taxpayer falsifies a document, okay, a taxpayer produces, furnishes, or send or make a document that is false. Okay, once the information is given to what? FRS, that individual is guilty of such offence and is liable on conviction to a fine of twice the amount under declared. So if for instance A Limited falsifies a document or understates is what? Its value added tax, okay, by the time that information gets to FRS and is discovered, the fine will be what? The amount under declared, the taxpayer will pay twice of that amount to the relevant tax authority, which is FRS. Then for evasion of tax, if an individual participates or takes steps in view to making the evasion of tax by him or any other person, okay, the individual is guilty of an offence and liable to pay on conviction a fine of 30,000 naira or twice the amount of tax invaded. Whichever is greater, that's what the individual will pay. Or imprisonment for a term not exceeding 3 years. The another offence and penalty, if there is a failure to make attribution, if a person requires to make attribution, if a person that is required to pay attribution fails to do so, and at the same time fails to notify FRS, okay, you have a penalty of what, 5,000 naira. Failure to notify change of address. If a taxpayer fails to notify FRS of change of address within 1 month of such change, he or she is liable to pay a penalty which has been increased from 5,000 naira to 50,000 naira in the first month and 25,000 naira in subsequent months. It was previously 5,000 naira in the first month, okay? Then failure to issue tax invoice. A person who fails to issue tax invoice for goods sold or services rendered is guilty of an offence and liable on conviction. The essence of tax event is because in cases of tax audit or tax investigation, the tax officers can clearly see the what receipts, the evidence of invoices of, because by the time you make purchases, you receive, you get what, you get receipts. Okay, you get an invoice, and the invoice will show the what, the total amount paid, and then it also show the what, the VAT charged to the what company. In the case of sales, when goods are being sold or services are being rendered, the same thing applies. So that's the essence of what, ensuring that their tax was invoice. A person who fails to issue tax invoice for goods sold or services rendered is guilty of an offence and is liable on conviction to a fine of 50% of the cost of goods or services for which the invoice was not what it should. So let's look at the merits of value added tax, which means the advantages or what disadvantages. We'll have multi-choice questions, okay? We'll look at very soon. And you know the answers of these questions are what we've discussed above, okay? So what are the advantages of value added tax? One, it's a reliable source of government revenue, very, very reliable. In fact, it comes on a monthly, it comes regularly, all right, on based on every vatable goods. Okay, once a good, when you go to the when you go to shop, for instance, you go to ShopRite to buy things, most of the items are being purchased. If they are vatable items, VAT will be what would have been, will be deducted. Okay, you go to, you buy goods, other goods online, most of them would have included their VAT before transferring to the what, before transferring the product to the what consumer. Okay, so secondly, it eliminates the narrow scope and cascading effect of the repealed sales tax. Okay, it's a consumption tax, hence very easy to collect, quite very, very easy at every point in time. Fairness is established because of because consumers pay the tax in line with their consumption of goods and services rendered. Like I said, when you go to ShopRite to buy goods, in fact, before, once you get to the counter, okay, and you either give them your ATM for payment, probably through POS, you know, we're in cashless society, or you pay cash, the value added tax as of VAT has already been what included. Or for those that go to beer parlors to drink, or they go to lounge, etc. Okay, most of the items you buy, VAT has already been what included in such what items. All right, then it can also be used as a tool of fiscal policy. Items can be exempted, tax rates can be changed to achieve specific economic what objectives. What are the disadvantages? High administrative costs on the part of what, of government. Yes, high administrative cost. Okay, it's the cost of administration is quite high on their part, because for value added tax, because there are a lot of companies, or individuals that do not what, that companies that do not remit value added tax towards FRA, so they have high administrative costs here in terms of carrying out tax audits, carrying out tax investigations, and so on and so forth. High cost of keeping records by the company stroke what agents, especially keeping the VAT accounts. So in most cases, they may need to employ the services of an expert in that field that can easily what, compute their value added account, that can carry out their value added accounts, okay, so that they'll know the exact VAT to remit to FRS on a monthly basis. Okay, then corruption on the part of tax officials can render VAT ineffective. problem of inadequate information can make VAT administration what ineffective. So let's look at these multi-choice questions. We have about 5 questions here, all right. And as expected, I expect you to have your notes and pen. So while I'm reading the questions, you write your answers down. Okay, that's how you know how far you got followed through during this discussion of the class. Okay. So let's look at the first question together. Which of the services stated below is not exempted from value-added tax? A. Medical services. B. Consultancy services. C. Services rendered by units, microfinance banks, and mortgage institutions. D. Plays and performances conducted by educational institutions as part of learning. E. All exported services. And then the answer is what? B. When we looked at services that are exempted from value added tax, okay, consultancy services is not among the following. All right, then two, a taxable person is expected to register with FRS for VAT purposes within how many months of commencement of business? A. 9 months. B. 12 months. C. 6 months. D. 15 months. And E. 3 months. The answer is what? 6 months, which is C. Wow, I'm seeing answers already. Okay. Three, one of the following is a demerit of VAT, value added tax. A. High administrative cost on the part of government. B. Reliable source of government revenue. C. It eliminates the narrow scope and cascading effect of the repeal sales tax. D. It is a consumption tax, hence it is very easy to collect. E. Fairness is established because consumers pay the tax in line with their consumption of goods and services rendered. The answer is what? A. High administrative cost on the part of the government. That's part of the disadvantages of value added tax. The others are all advantages of value added tax. Let's look at question 4. In carrying out VAT enforcement, VAT inspectors shall visit the premises of the vatable persons to do the following, except A. They can assist in calculating VAT. B. To ensure compliance with VAT law. C. To ensure the amounts deducted as VAT are promptly accounted for. D. To examine the method of keeping records and offer suggestions where necessary. E. To educate VAT agents on new development in the system. Value-added tax inspectors are expected to carry out the following, except what? A. They are not expected to assist in calculating what? Value added tax. Then let's look at B. What is the timeline for filing monthly VAT with us FRS? A. 20. Wow. Someone has answered already. Okay, without looking at the question, without reading the options. Okay. I've seen it. What is the timeline for filing monthly VAT with FRS? A. 20th day of the following month. B. 10th day of the following month. C. 30th day of the following month. And D. 21st day of the following month. The answer is what? D. On or before the 21st day of the following month, the taxpayer is expected to remit value added tax to tax authority. And E. 14th day of the following month. Okay. Then we have open-ended questions. I think about two open-ended questions. Okay, and then you have an assignment. All right. So let's look at this together. Jonathan Ekudu Trading Company is registered for value-added tax scheme. The accounting records of the company reveal the following information for the year ended 31st December 2013. So this is the information of the company for 2013. We have revenue given to us. The revenue shows VAT inclusive, which means VAT is included in this what amount. Purchases of raw materials, VAT inclusive. Okay, transport and traveling amount, the VAT is also, VAT is exclusive. Vehicle running Let's continue. The vehicle running expenses, VAT exclusive. Okay, we have 850,420. We have office equipment, VAT is inclusive in the amount. Okay, furniture and fittings, VAT is exclusive. Motor vehicle, VAT is inclusive. Audit and accountancy fees, VAT inclusive. Bank charges, VAT inclusive. Miscellaneous expenses, VAT exclusive. What are we required to do? Compute the VAT payable by Jonathan Ekpudu Trading Company for the year ended 31st December 2013 and give reasons. Ignore penalties and what and interest. So what are we expected to do? They've asked us to calculate VAT. So what it means is that we need to open what? We need to look at the VAT accounts of the company, okay? Calculate the input VAT, calculate the what output VAT, and then with that we can now know the VAT payable by the company to FRS particular for this period under what review. So here, first and foremost, what is the turnover of the company? So let's go to our workings, okay? What's the turnover of the company? Looking at the question, be given revenue, which is also known as what turnover, and the turnover is 30,400,500 naira. Okay, and they've told us that this amount is VAT inclusive. VAT has been charged in the amount. So we need to what get the exact what. Let's calculate our what output tax. This this is our output tax, which means what this VAT was charged on what sales of goods or services was rendered. So we have 5 over 105 because we are operating VAT is already included in this amount times our total what revenue. By the time you do this calculation, as our output VAT, this is all we arrive at 1,447,643 naira 643 what 447,643 naira. So that's how we arrived at as our output VAT. This is the amount. So the next we'll calculate is our input VAT tax, which is the tax based on what purchases on supplies. Let's go to our what? Our question. Purchases of raw materials. It's showing here that the amount given to us, VAT has been what included in the amount. And what's the amount? 20,140,650 naira. So we'll go back to our workings and calculate. Since VAT is included, we have 5 over what 105 times the said amount. By the time you press your calculator, what will you arrive at? 959,000 and 79 959,079 naira. So that's our what input VAT. So by the time you deduct your what output VAT, this is based on sales minus your input VAT, which is based on purchases. Our VAT payable is what 488,564 naira. You know, since they are paying at the end of the year, this is for a year. It means there are penalties that will be what penalties that this company will pay because they're expected to remit VAT on a monthly basis and not on a yearly basis. So let's look at the above comments I have mentioned. The VAT Act 2004 allows input VAT as a deduction from output VAT to be limited to the tax on goods purchased or imported directly for resales and goods which form the stock in trade used for direct production or any production on which output tax is what is charged. Okay, here they ask us to what give reasons. What are our reasons? So I just go ahead to what explain what you understand by what value added tax, the input tax and the what output tax. Then VAT is what paid on any overhead service and general administration of business output which otherwise cannot be expensed through statement of comprehensive income and therefore it could not be allowed as what input VAT. So looking at our questions, most of these they are already expense. Okay, they either come under administrative expenses. Okay, they are already expense. So therefore the VAT that has been what these VAT have been expense, you cannot pick them as your what input tax. Okay, and don't forget the consumption variance is what we currently use in Nigeria. All right. Then VAT paid on any capital item and asset shall be capitalized along with the cost of acquisition and it shall not be allowed as input tax. So let's look at our question, which is question number 2. Olabisi Limited. Olabisi Limited is a manufacturing outfit based in Mowe, Ogun State. The company sold its vatable products to a wholesaler, Arcade Enterprises, for what? The wholesaler in turn sold the products to a retailer, Mrs. Ojelade, for what? 3.5 million, who finally sold to consumers for 4,200,000. Assume there was no closing inventory at each stage of the what transactions. Required, calculate total VAT payable towards FRS. So first things first, when you are doing your calculation, please, it is very important for you to put the name of the company or the name of the individual you're expected to what calculate for before you go ahead to what to do your calculation. Please don't forget, while you go ahead to give them the solution to the answer, it's also very important for you to have workings, because the marker of your script want to see how you generated the values that you want them to exactly. They want to be sure you did not copy the words, the values from someone else. So please ensure you should show your workings. So this table here illustrates the calculations and how I arrived at what each of the what answers. Let's look at computation of VAT payable for the relevant tax year, because no year was specified in the what question. So let's look at it. First and foremost, the first person we have here, okay, is the what? Manufacturer. And who is the manufacturer? The manufacturer here is AK Enterprises. That's the manufacturer. And AK Enterprises sold what? Sold goods to AK Enterprises sold goods for what much? 2 million naira. So that's the amount of the goods. If by the time AK Enterprises sold the goods to Mrs. Ojelade, okay, but first and foremost, we have what? AK Enterprises. Remember that this year is what? Output VAT. Output VAT to be calculated on this amount, because goods was sold to a customer and the amount was 2 million naira. So we need to calculate the VAT, okay, by payable by this was individual. So the VAT is what? 5/100. Please, I'm using 5% because value added tax was previously what? 5%. However, the new rate, which started from February 2020, is 7.5%. That's why I stated that at the beginning of the class. Okay. So we have 5/100 times 2 million naira, and that will give us what? 100,000 naira. The net VAT on this amount is what? 100,000 naira. So this is a VAT that is payable by what? By Ake Enterprises. So Ake Enterprises sold to the nearest person, who is the wholesaler. And who is the wholesaler? Mrs. Ojelade. She bought it at the rate of what? 3,500,000 naira. And for Mrs. Ojelade, okay, this is the what? Mrs. Ojelade bought for 3,500,000. She will pay what? She will pay VAT of what? 5/100 times 3,500,000. And what will her VAT be? 175,000 naira. Okay. That's the 5% on 3.5. By the time you calculate it, you have what? 175,000 naira. This is the amount. But don't forget, if Mrs. Ojelade wants to pay her VAT to FRS at the end of that month, what will she do? She will go to her what? VAT account and calculate the amount that she wants. Okay, what was the output VAT? Okay, sorry, I observe I made a mistake here. Okay, the manufacturer here is Olabisi Limited. Olabisi Limited is the manufacturer, and it was Olabisi Limited that sold to what? Ake Enterprises for 2 million naira. Okay, so what it means is that the Olabisi Limited is the one paying what? 100,000 naira. Okay, because the person made a sales of what? 2 million naira. Who purchased the goods as a wholesaler? Ake Enterprises. So this is Ake Enterprises. Are we together? Ake Enterprises what? Are we together? Ake Enterprises sold the goods to Ojelede for what? 3,500,000 naira. So the sales made by the Ake Enterprises was what? 3,500,000 naira. And before Ake Enterprises will remit, what will she do? She will first calculate what was the amount I paid for my purchases. VAT on what? The input VAT I paid, it was what? 100,000 naira. What was my output VAT? 175,000 naira. By the time you need of output VAT from input VAT, what will you arrive at? 75,000 naira. Okay. Mrs. Ojelade sold this to the final consumer for 4,200,000 naira. So here we have the was final consumer who bought it was 4,200,000 naira. And then by the time we calculate our gross VAT, what's our gross VAT? 5 over 100 times 4.2. What's the amount? 210,000 naira. Okay. By the time you calculate 210,000 minus the previous what? The previous VAT so far, what do you have? 175,000 naira. The net VAT will be what? 35,000 naira. Do we understand? The net VAT, this means this VAT payable is the amount payable to FIROS. So the total of all this will be what? 100 plus 75, that's 175 plus 35, that's what? 210,000 naira. Okay, 210,000 naira. So that's the total VAT was payable. So you can see the importance of what? VAT input, VAT output. For those of you that already work in organizations where you've not been remitting the correct VAT to FIRS, you can see that this is an eye opener. You can then go ahead to create a VAT account for your company. Ensure you put your input VAT okay. You input VAT on the debit side of the account for the company every month, and you output VAT on the what? On the credit side. At the end of the day, whatever, when you have a VAT credit, you what? Remit to what? FRS. If there is a debit, you also what? Inform FRS and then use it to what? Offset your following month what? Value added tax to FRS. Okay. So these are question 3. And don't forget, it's important for you to keep your what? Tax, your invoices, okay, which can also serve as evidence by time anytime FRS come around to carry out a tax audit or tax investigation. So question 3, you should be able to answer this. We've explained this above. With regards to VAT, write short notes on the following: A, the gross product type variant, the income type variant, the consumption what type variant. Okay, just as we answered above. And then I have a short assignment for you. Okay, is on Shode Abiola Ventures Limited. This is a small-scale producer of chemicals. The company bought materials worth 4 million naira during the year 2013 from its major supplier, Shein Works Limited. Additional sum of 1,250,000 was incurred in the process of converting the materials to finished goods. Total revenue, VAT inclusive, of 7,650,000 was recorded during the year, which represents 75% of the total cost of finished products. Required, determine the total VAT payable for the year ended 31st December 2013. So this is an assignment for you to please ensure you work on it, okay, and send me the solution you've arrived at. If it's incorrect, I will also will correct you. You have access to you have my phone number already, okay, which gives you can always chat me up to ask questions at any time while you're preparing for your forthcoming exams. If you have any questions, you can call me. You can also send me chat, and I will attend to you as quickly as I can. Okay. And this is all we've looked at so far. Okay, the material has already been sent to the class, so if you have any questions, I'm ready to entertain questions, okay, within the next 3 minutes before we call it a day. Okay, kindly send your questions to just send your questions as chat while I attend to it. Okay, please send your questions. Okay, yes. Okay, I just read one. Oh, yes. You can do your assignment. Just send it to me via WhatsApp. I'll attend to it as soon as I can. Right. Okay. Once it's, I'll send you my own. But I want you to attempt it. Okay. So I'll be sure you understood all that we've learned so far today. Okay, so I think I'll call it a day. Thank you to each and every one of you. Thank you for being patient. Okay, do have a lovely. Okay, but before then, for your forthcoming exams, for your ICANN forthcoming exams, I want to advise why you go ahead, while you're still studying and preparing for your exams, ensure you try to cover every part of the syllabus, okay, before the exams. Try to practice as many questions as you can practice, okay. Practice questions, attempt questions. If you have any issues, you can always reach out to I, or you can reach out to Mr. Chima, which is the other lecturer for taxation, okay. Then for the examinations, for the examination, while when you go to the exam hall, ensure you go along with all documents that is required of you. Go with your writing pens, your ruler, your biro. Then don't forget to get a what, the printouts, okay, which will be requested for when you enter the exam venue. Ensure you're as composed as ever, and don't forget, like you're not read like you have not prayed before, and pray like you have not read before. So do both, like you are not depending on any of the above. Pray like you have not read before, like you're not depending on what you've read, okay. Then read like you have not prayed before. So very important, please, a major factor, God, whichever God you're serving, always remember to what, or put this in prayer, the success of the examination in prayer, okay. Once you get to the examination, or try your possible best to be composed. Focus on read the questions more than once. First and foremost, read the instructions given to you. Instructions can always change. The instructions may be different from the what ones you've been reading in the previous questions you've been solving. So it's important for you to read instructions clearly before you start attempting questions. Read the requirements of the questions more than once, probably twice, before you would attempt it. Okay. And once you're through with the examination, okay, and you leave the exam hall, before then ensure you write your numbers, your registration number via necessary and all. Once you read the examination hall, kindly do not discuss whatever you've written down with anybody. Just pick your pens, probably say hello to anyone, but try not to discuss all what you've done so far, and then go home and leave it in the hands of God. Okay. I hope to hear good news from each and every one of you, or your success stories. Okay. So we'll know the next step is why you move to the next level in this professional journey. Have a very good night's rest. Thank you for your time today. From yours truly, Adesua outside there, Kerry. Good night.
Well done, ma.
Thank you, sir. Please end the class, sir. Yes, sir.
Do have a lovely night.